Thank you to everybody at MAS and everywhere for organizing this event, inviting us, and thank you to these panelists. They're going to make my job, I think, very easy today, right? Excellent panel. So my name is Patrick Murck. I'm special counsel at the law firm Cooley. I'm also an affiliate at the Berkman Klein Center at Harvard University. I've been involved in digital currency and fintech startups and technology companies for about a decade now. Over that time, I have been a founder, CEO, early employee, advisor, board member, investor, and a lawyer. I think I've tagged all the bases when it comes to fintech startups. I'm very excited to hear from this distinguished panel. And maybe we'll start with Pieter. Do you want to give a very brief introduction, and we can move into the questions?
Yes. Good afternoon. Thank you for coming after the lunch. It's always difficult. My name is Pieter Franken. I'm with the Monex Group in Japan. Some of you may not know Monex Group, but if I mention to you that Monex Group acquired Cheques earlier this year, many of you will probably know about our company. Besides that, Monex besides in Japan, we're one of the leading online brokers. We're also owner of TradeStation in the US, which is the 6th largest online broker in the US. We have a broker in Hong Kong called Boom Securities, and more recently we've been working on that. A little bit about myself. I'm based in Japan. I've been kind of working in the tech fin space my whole career, kind of a fintech veteran, working with many banks and doing large digital transformations. More recently, and as mentioned, I've been at the FinTech Festival a couple of times. I'm one of the advisory panel members of the ITEP committee that advises MIS on innovation and technology. We're actually meeting this week after the FinTech Festival is over. I'm also been a researcher, and since this year I've been guest professor at Keio University in Japan, where I focus on blockchain research, and I'm an affiliate researcher at the MIT Media Lab, where I'm a member of the Digital Currency Initiative.
Thank you. Good afternoon, everyone. My name is Vijay Chandok. I'm Executive Director on the board of ICICI Bank. ICICI Bank, as some of you would probably be familiar with, is amongst the largest private sector banks in India. One of the things that really makes ICICI Bank stand out is the fact that we've been, over a long period of time, extremely committed to innovation and technology. And we brought many firsts into the marketplace, not just in India, but perhaps in the larger part of Asia. So at ICICI Bank, I look after the international business, the commercial banking business, and I also see the SME business at the bank. Thank you.
Hello, I'm John Lepore. I work at MasterCard. I think most people in the room know of MasterCard. People outside this room tend to think of us as a credit card company. But I know that all of you know that we've moved far beyond credit cards. It's now a virtual credit card. But the role that we play in the payment ecosystem today is the same as we played 50 years ago when we first started. And that is connecting the key players in the payment ecosystem. So consumers, financial institutions, merchants, businesses, and government. And today, 50 years on, that includes fintechs. And the way that we engage fintechs is through our innovative program called StartPath. Every year, we evaluate 2,000 fintechs and onboard 40 and work with them in partnership to develop their products and their services. And it is a great two-way learning relationship. And it's a big part of the reason I'm here today.
So I'm Bénédicte Nolens. I'm the head of regulatory affairs, and I need to correct, I'm not the chief commercial officer. That's a new title. I'm the chief compliance officer, okay? So my background is actually in this whole regulatory and compliance and risk area, as well as I was a regulator for 6 years with the Hong Kong SFC. So I finished with the SFC earlier this year, and then I joined the sector I'm in now. So I'm with Circle. Circle is a crypto company. For background, we have payments business. We have an OTC trading desk, in fact, second largest globally for cryptocurrencies and any kinds of tokens. We also have a crypto exchange. And we recently set up a foundation with the view towards issuing fiat tokens and to create interoperable payment systems. So I think throughout this discussion, we will touch upon several of these different aspects. And the philosophy of the CEO is that we will see more and more tokenization in the world, and that of course is all connected to a movement towards digitization and payments being digitized and connected through blockchain with smart contracts. So it can open up a lot more trade and a lot more financial inclusion in addition to the already existent financial system.
Great. Like I said, I have an easy job here, right? Great panel. When we think of money, right? Money is a thing, and money and payments and all this infrastructure for making payments. It's been a continuous evolution over time, right? To meet the needs of society, right? Whether we're talking about paper cash or bitcoins or payment cards or checks, wires. The question when we come to an event like this and it's a fintech festival, is it really a fintech festival or is it really a techfin festival? Like, which is driving this here? Is it being driven by technology or is it being driven by market demand? And I'll just throw it open to the panel, whoever wants to jump in on that one. Pieter, of course.
Sorry. I just wanted to make a few comments around it that may be interesting. Technology always played a really important role in banking, even though we called it banking, it was really all about technology. Some of you may not realize, but the first ATM was put in operation when I was born in 1967. So that's a long time ago, and the technology has evolved dramatically. But there is, as I worked for large banks, including Citibank, etc., what I noticed is that the cost we had to build this infrastructure was humongous. But we also were driving lots of the technology, you know, the legacy systems that we were talking about, where the new tech in the 80s, 90s, and 2000s was very expensive to build, very hard to maintain, and even still exists today. So we talk about fintech today. Where is that fintech coming from? If we had all that technology, what is so new? I don't think it necessarily is the blockchain, it's the AI, it's the mobile, it's the internet on its own. Yes, all these new technologies are there, but if we go back 10, 20 years ago, we always have something new to talk about. And I think if we talk about fintech, I think it is definitely for me, techfin. I'm a technologist. The reason I'm saying that is that technology has been driving a lot of the innovations. However, a very important aspect that sets current new technologies apart from what we had in the past is the accessibility of technology. And it is open source. It's the ability for customers to have access through mobile phones, internet, etc. That has been the big kind of key to the door that has been missing. So if we talk about ASEAN, Southeast Asia, Africa, etc., the real big difference is that the cost of entry is the big difference. So if we think about the old fintech, it was not only expensive to build things, the regulations around it and everything meant it was very hard to enter as a newcomer. Today, with the lower cost of technology, but also regulators that are starting to open up and a need for that, I think the democratization aspect of technology, I think, is the new fintech. So long answer, but that is kind of how I see things.
Very nice answer.
And I beg to have somebody disagree with that.
Yeah, I just thought I'll give probably a slight build up on that perspective. I mean, the way I look at, whether it's a techfin or a fintech, last 8 to 10 years, I've seen such a huge change in technology driven by not just access and availability at the hands of the consumer, but also in terms of the speeds, the costs, all that coming down. And that's actually starting to change the way consumers, commercial enterprises are engaging, transacting, behaving. So I think the new methods and techniques of payment is sort of emerging from that inherent change which is taking place in the manner in which people are changing. So, to your point, whether it's need which is driving or technology, I see there's a bit of a convergence taking place. There's a need which is clearly emerging from changed methods of engaging, and technology is propping it up with their own evolution by providing solutions. On the other hand, we are also seeing now that technology has evolved, we are seeing that technology itself provides a solution which is probably outside the domain of the need, envisaged need. But when you see it, you like it, you want it. So there's a bit of a convergence in my mind.
One of the interesting things about my role is that it's global and it covers regulatory affairs and public policy. And when I look at the landscape globally, and we all see it, you see that the technology is essentially ubiquitous. But yet we see that it's taken up and used in different ways in different parts of the world. So what that's telling me is that the need is driving the use and the uptake of the technology. And some of that has to account for different regulatory environments that encourage the use of different types of technology. But I think the baseline is more so around whether these products and services are really addressing pain points for consumers. And when you see that happening, then I think you see a rapid and often case a transformational uptake in the use of technology that's not happening in other markets because there's not a need for it.
So I think I like to look at even my own generation to answer those questions. So I actually, I date back to, let's say my student period and first jobs date back to the 90s, okay? That gives you an indication of age. But I still remember I was doing my University of Chicago degree and I got my first laptop. And that laptop costed $3,500 US. And it weighed, I don't know, but it was kilos. It was really hard to carry. And on top of that, it was superseded in 4 years. And I think that was the start of a lot. And then I started my first job at Goldman Sachs actually in Asia. And I found it revolutionary how I could buy things over eBay. I didn't need to go to a shop for the first time in life, and I could just get this sent. And my choice was so much bigger because I could see things from all over the world, and I didn't need to fly there. Right. In this same generation, this is just one example, but this is the year that, in fact, the first mobile phones came out. And a couple of you might remember, it was that very nice looking Motorola that you flipped over after the Nokia. There was the Motorola. The point is, at the time, I wouldn't have known we needed all of this, right? Laptops, mobile phones. We didn't know we needed or could use an iPhone, but now our youngest kids are using iPads, iPhones, including for school. I think personally that the iPhone has been the biggest changer of it all in terms of where we're going with TechFin or with FinTech, i.e. for the first time in a long time, a lot of people have access to it. In China, apparently, there are 1.3 billion mobile phones in use. Some people have 2, but that's 1.3 billion in one country. Of course, they have 1.3 billion people, but that's a lot of mobile phones, nevertheless. Mm-hmm. So there is an ability to connect with the use of that smartphone, which has, of course, enormous computing ability, if you think of it. And you can cross over to the need. And that there is a need is very obvious. The need is still the underbanked. So the success in China of WeChat Pay and of Ant is really as a result of underbanked. And if you look broader in the world across, let's say, our very well-developed markets, underbanked remains the issue, underserved, these people have no credit cards. So that is still a whole opportunity, and I think the chairman of the MAS, Ravi, actually did refer to that earlier this morning by saying financial inclusion and the continuation of working towards interoperability got to be a goal in and of itself.
Great. So we think about this TechFin or FinTech, however you want to view it, and the 1.3 billion little computers that are all probably, each one of those more powerful than that laptop you bought in the 90s. One sort of instance of, say, a government sort of spurring on the evolution of money, right, towards a more tech future is in India, and the demonetization and the goods and services tax and all the things that have been done there by the government to move people off of analog paper money and into a digital cash system So Vijay, maybe you can shed some light on that, some lessons learned from that experience.
Indeed, I think both demonetization and GST were significant policy interventions by the government. And what we saw soon after was a massive disruption where the people started migrating from cash to non-cash methods of transacting. And whichever item of digital you track, be it prepaid cards or basic cards, which is an alternative to currency, or even the UPI, which is a virtual account that you can have and transfer money, all of them went up by a staggering percentage. And it continues even after the second year of demonetization. But in recent times, I've been also hearing about some commentary which is coming, which actually talks of some kind of petering off and a slowdown. And there are some arguments which says that now the total amount of currency in circulation is actually back. So is it really working or it's not? The way to look at that is, number one, if you look at digital before and digital after, it's far higher, despite cash coming back. Yes, it's true, when cash went away, close to 86% of $250 billion of high currency money went away. Today, that number is probably back to about $270 billion. And digital is growing. But the way to look at it is that 250 as a percentage of GDP was about 12%, currently 10.8. So cash has actually come back. Had this initiative not been done, probably it would have been $30 billion more. So clearly there is a move towards embracement of non-cash channels. Learnings, I think there are a few learnings out of this experience which I thought I'll share. I think the first clear, simple takeaway is that you need policy intervention from the government to start shifting, because you're trying to address human behavior, and it's not easy unless you sort of facilitate it. And it's not just about facilitating through policy, you need to also supplement it through a physical capability. You need a technology solution which works. Both of them actually came to the fore in Indian context. The second learning is that just one-time initiative is not okay. You need to keep at it. You need incentives, schemes, programs, customization, localization, all that is required. The third is that you need to keep investing in infrastructure so that clearing infrastructure gets more efficient and more suited to what the learnings while implementing digital infrastructure solutions lead to. So you need to keep making this. The other learning actually was to make it work to the type of growth that we saw in India. I think government did a very simple thing. They actually set targets for the banks. Each bank was entrusted with a target to get number of accounts, get number of transactions. I think this year the target set for the banks was about 25 billion digital transactions in a year. So, and it's actually getting monitored, and we see that there is a lot of efforts being made by the participants in the ecosystem to push digital, to encourage digital, and so on and so forth. And finally, I think it's important that we have to be patient and we have to be realistic. You're talking of change of human behavior, something which is so deeply anchored in the minds of people, it's not going to be easy. So have realistic targets, but be at it. I think these were some of the key learnings from the India experience.
That's great. Thank you. John, please.
If I could add, for a company that has an open declared war on cash, I couldn't find a better opportunity, a better example of leadership than what's been happening in India. I think Vijay is absolutely right, though, that it is an important first step, but it is not sufficient. And if you look at some of the metrics, in addition to the ones he mentioned, there are others that are very good, well, depending on your perspective. So income tax payment is up 25%. That's great if you're government. If you're a taxpayer, you might have a different view. But from a government perspective, I'm sure that's considered to be a success. And the use of debit cards is up over 300%. So clearly there has been a step change in behavior. Whether that's sustainable, we'll need to see for the future. And what we've been doing at MasterCard is partnering with merchant organizations, the Confederation of All India Traders, to try to develop changes in habits, changes in behavior, changes of awareness, but also uptake of technology that will allow the demonetization to really get legs and power on into the future. So we're hopeful about this start, but we know that there's a lot more work that needs to be
Yeah,
done.
and I can just add that demonetization benefits are now more palpable, but the benefits of GST is still early days. So that's why the next few years, the expectation is that the amount of digital transactions from about $200 billion, next 5 years expected to jump to about $1 trillion. So more to come, clearly.
So demonetization is a good example of technology and policy coming together to drive a result in the market. Maybe, John, could you give us some more concrete examples of technology being used to create new inclusive economies and address some of the underserved populations and things like that? I know you've been active in that space.
Our CEO often talks, both internally and externally, about doing well by doing good. So a lot of the examples I can talk about are actually sustainable business models for us. It's not simply part of corporate social responsibility. So bringing it home to Southeast Asia, one that we announced very recently is a partnership with Grab to partner on developing a prepaid card, both an actual card, but as well as a virtual card, that will address the unmet needs for the underbanked 400 million individuals living in Southeast Asia. And what that allows is for those individuals who don't have bank accounts to use cash in a variety of easily accessible ways to top up their account. With Grab being so present in the market, it really serves an unmet need in that particular segment. Another good example, and you see this particularly across Asia more broadly, including India and China, is the use of QR codes. And this has been a key part of the response for demonetization in India. But what it really allows is for very small merchants, usually what we call the mom and pop shops, to be able to engage in digital transactions so that they're not simply reliant on cash and all the problems that comes along and the costs and risk that come along with cash. And MasterCard and the whole payments industry has been extremely active in developing interoperable standards and promulgating those across Europe, again, to the benefit of small and medium enterprises. Another example, which we launched very recently in the past few months in Singapore, is called Track. And the idea behind Track is to connect, again, small and medium enterprises into the global supply chain by having a very systematized, open and transparent way for small suppliers to engage with big global companies. And we've partnered with NTP in Singapore as the first partner in launching that product. And we think, again, in terms of financial inclusion, while that is not focused on the individual, it is focused on small business. Again, there's so many opportunities around the world. If you look at Africa as a good example, we have products there which allow individuals to be able to buy solar power on an as-needed daily basis, again using innovative technology in the payment space to be able to access what they need and the amount they need when they need it. So there are numerous examples, I think, around the world, very exciting, where financial technology is bringing people into financial inclusion.
Great. So one question that I always have, and Pieter, maybe you can help us with this. When we talk about these new technologies, and you said you're tech fin, you're a technologist first. So when you look at the new technologies that are emerging out there in the market, when you look out on the floor and you see all these companies and these new business models, some of the things that John described, some of the things that Vijay described, how do you see technology reshaping the competitive landscape for payments, money, all of these different things?
Right. I think it's a very relevant question in today's session. So there's lots of aspects, I think, to how tech will impact that. It's already happening. When I took the taxi to Haneda Airport on the way here, the only option I had in the taxi app, this is not the Uber app, Japan has its own taxi app, Apple Pay. Right, so a couple of years ago that wasn't there. So we also see new players like Apple, Amazon, Alibaba, etc., coming onto the market using technology to start becoming a key player in payment. Of course, they're also a key payment provider, your Alibaba points or your Amazon points are kind of digital money. You can use that to buy more things. So these things are happening. And those new entrants into the market are not banks. There are high-tech companies that bring a lot of new thinking, how to build communities, how to be basically in front of the customer. I think banks today have a big challenge. They're not in front of the customer anymore. Your Facebook or your Alibaba shopping account is in front of you. I think those are big shifts that are influencing, through technology, starting to influence how we see payments and how we interact with each other. Line pay in Japan is becoming popular. People are paying for lunch with their mobile phone. So it's happening. I think we have not really talked about crypto yet, and I want to talk about it for a second. I was just kind of curious, because you guys have been very silent in the room, and it's after lunch, I know that. I just want curious, how many of you have a crypto wallet installed on your mobile phone? 1, 2, 3? Is that really? A little bit. So that's, I don't know, maybe 10%? Fair enough, right? So,
Still you have a long way to go.
Yes, a long way to go. And so it shows that, technology is there, but you're not really there. However, in Japan, Monex acquired CoinCheck. You have heard about the accident happened there. But what is interesting is in Japan, crypto exchanges were regulated over a year and a half ago. Ever since that happened, crypto exchanges became in operations. CoinCheck, at the time it failed, had 1.7 million registered customers. Just to put it in perspective, Monex Group, our company, had about 1.7 million securities trading customers at that point in time. That took us 20 years to build up. This was built up in just over a year's time. If you put it in contrast, that in Japan there was about 10 million people that are trading at all. The total number of crypto accounts in Japan is about 4 to 5 million right now. You see, in a very short amount of time, there has been a huge there was a huge demand for it, but nobody knew it, but now 5 million people are trading in that. So can it reshape? I think it can go really fast once people get into it, once regulators start to lay kind of the groundwork for these type of new technologies to be legal. Things can happen very rapidly. So yes, I think the technology infrastructure that is here today can do amazing things. Not just in Japan. I think specifically in developing countries where lots of traditional infrastructure, we were talking about ICICI in India, where still a lot of the infrastructure is still very much branch-driven or ATM-driven. What is interesting is if you look at financial inclusion in Southeast Asia, the countries that have the lowest financial penetration, where maybe 20-30% of the people are banked, the penetration of mobile technology is 80%. So you don't have to be a rocket scientist to figure out that technology is going to have a huge impact in terms of payment and banking, because that's what people are going to carry, and it will be too slow to set up traditional infrastructure. And it also economically, it's very difficult to reach so many people. So I think technology, yes, is going to make a huge impact on how we're going to perceive money in the future.
Great.
No, I just want to color it a little. See, we are seeing two types of technological innovations. One set of technological innovations which are sort of riding on the backbone of a regulated entity, remittances, for example, cross-border. The other is which is actually replacing a basic infrastructure, clearing infrastructure like the digital, the blockchain sort of protocol, which is actually challenging a regulated capability of transmitting information and money. I think in the first segment, the regulatory buy-in, acceptance, etc., is far higher. Even banks are quite happy to partner with them. The the technology companies are quite happy to partner because they are able to offer their wares, make their money, and then use the network which is regulated for the final closure. So that's, I think, continuing to grow, and that probably will continue to grow. It's the second part where I think the house is a little divided as to how things are going to go. But my sense on this is that these companies would need to offer themselves for more transparency, more openness, willingness to get regulated before they really can make an impact. So that's one sort of gap that needs to be crossed. I think from banks, which are the other players' point of view in this whole space, banks are also looking to either partner with such entities wherever it is regulatorily sort of aligned, or alternatively even try and embrace that technology in a regulatory environment so that you get the benefit of the technology and still be able to meet the regulatory expectations. So I think that's how things are probably shaping up going forward.
Got it. So when we think about these new technologies, whether it's the technology that's shaping the market, or as Vijay put it, in a way that the regulators are helping shape the market. So, Bénédicte, when we talk about these new technological approaches and things like that, how do we think about policymakers and regulators, and how can we help those stakeholders capture the benefits of all this technological innovation, while at the same time managing some of the new risks that can emerge?
Okay, so I think we're nearly run out of time, so I'll keep it fairly short. But let's say I think you just touched upon the key thing, is that business, whatever business is and whatever tech you use, it needs to be done in legitimate ways. So for example, in the case of Circle, I mentioned at the beginning that we have set up a new foundation that will be used for issuing, and has already been used for issuing so-called stable coins or fiat tokens. Now, the way that you create a legitimacy around that is to ensure that that the reserves are somehow linked up to the banking system, are held in the banking system, that they're actively audited, that there is full KYC done, that the smart contracts are reliable and audited. So as said, probably the only way for things to succeed on a significant basis is to be legitimate. And legitimate in practice means compliant with laws, but it also means compliant with principles of laws. So for example, for these fiat tokens right now, there are not many laws. So when, let's say at Circle, we put around all these protections on governance, these are additional protections that we put in place because we think those are fully necessary. So, and I think all of this is let's say, still at the inception phases, as some of the other panels also said, because it is not easy actually to be a new entrant, no matter what, in a highly regulated world. And on the regulatory side, I think what the MAS, for example, has done to be extremely proactive on communicating with the market, to have a sandbox, to have this FinTech Fest, all of this really was organized by the MAS. I think these are ways that you can show that you're open to innovation and continuing to progress the dialogue as innovation, let's say, reaches a stage of maturity where it's clear as to what the regulatory touching points are.
Great. Well, we started a little late, so maybe we'll get an excuse here. The Q&A tool, speaking of technology, is not working for me, so maybe we can have some of the questions from the crowd up on the screen, and maybe we can answer a couple questions before we go here. While we're waiting for that, oh, there we are. Wonderful. How many votes do we have? One vote. Okay. Well, one vote wins this time. Okay. So, to the panel. BIS's recent study showed that cash dependency, cash in circulation, GDP, is still going up in most countries, even in Singapore, despite the cashless push. Will physical cash ever go away? Vijay, do you want to start with that one? Bénédicte? I don't know.
So the beauty of this question is that there is no correct answer. So I will be right. I don't know who's going to really endorse the correctness of this answer. But my own sense is that both are growing. At least in the medium term, I don't see cash getting away. Cash is growing, so is digital methods of transacting growing. But what is beginning to happen is the contribution of cash as a percentage of the GDP, I think, is beginning to tilt. India's context, some interesting statistic, you had about close to 25% of by value transactions taking place non-cash and 75% in cash. The way digital is growing, expectation is that this probably would tilt to more than 50% digital and less than 50% in cash in next 5 years. And I think that's a very significant shift. But does that mean cash is going to come down in absolute numbers? No. Both are growing. So at least in the medium term, I don't see that change.
Most of this discussion has been focused on countries and markets where cash is still king. But if you look at the other end of the spectrum, in countries that are essentially cashless, so take Sweden as an example, I think you see the question of financial inclusion flipped on its head, whereby the use of cash is argued to be essential to include especially the elderly, who maybe are not as comfortable or familiar with using technology or cards or other sorts of options that they might have in addition to cash. So I think the ultimate answer to the question, if I knew it, I wouldn't be sitting here. But I do think, as Vijay said, at least in the near term, in order to ensure that we have maximum financial inclusion, cash will still be with us in some form.
Great. Bénédicte, did you have a thought on this?
Yeah, I think the key point is that all these mediums, in fact, all the mediums that have been developed with technology at the time that they were developed are actually still in circulation. So you take cash for granted, but the reality is when cash was first created, remember it was gold, right? It was something actually valuable, our silver. Secondly, there was a lot of fakes until there were central authorities to take care of that. And then obviously we didn't touch upon checks because funnily enough, that's the method that is dying the most. Credit cards are deeply ingrained into many people's activities, except that there is many people who don't have credit cards. So the opportunity is there, but there is still a white space as well. And as for crypto, I just want to address the last question because it's a very significant one. Let's say very clear BIS has said that Bitcoin cannot address these three functions, payment, unit of account, and store of value, because of the very high volatility that it shows primarily, but also other reasons. Fiat tokens that I talked to you about before are totally different. They are a one-for-one representation of actual fiat, and the fiat is being held in reserve accounts in licensed bank institutions, and these licensed bank institutions in turn have to be of high credit. Remember I explained the governance around center? So once you get to that, then they can be used as a means of payment, and they have a stable value because they have the exact same value as fiat. They're one for one. So then they become de facto digitized cash.
Great. Well, lightning round. Very, very briefly, some concluding remarks. We'll start with Pieter, come down the panel.
I think a few kind of comments on what we were talking about. I think if we think about the future of money, it's the future of data. And this morning at the keynote session, there was quite some talk about what about the data. And I think that is really where we're going to really have to think through is a payment comes with metadata. Is that metadata then owned by the person that sells, the bank, the intermediary, or is that owned by the customer, him or herself? And I think that whole question of who owns the data currently has created a big kind of divide in between the data havers and actually the consumers that don't have the data. I think that shift will ultimately happen, and I think technologies like blockchain, etc., for example, your health records or other things, why do we need central custodians that derive power from there? Why don't we start to rethink that? So I think that's one major thing. That's not only the future of money, it is tied to the future of how we're going to treat data in our society as one major thing. I think we're talking about crypto. There is a tremendous amount of challenges around replacing something that has been in existence for thousands of years. Do not expect it to be solved in a couple of years' time. But I think, for example, in Japan or other countries, there is more and more willingness to experiment with these technologies, regulators getting engaged, trying to figure out how to build the same kind of safety measures around things, thinking about how we can do that. And I think the last part has to do with longevity of these technologies. Are we building these things for the coming 100 years, or are we building them for a quick exit after 2 years by selling our company? I think there has to be much more thinking around how do we build that not only the tech, but the ecosystems around it that can sustain that type of distributed money or whatever for not 10 years, but hundreds of years. And I think there we have to go and look at academia and researchers and other people that are going to really put lots of effort in thinking through how do we build something that can last so long. And as an aside, we have not been able to build things that last very long as a human race. So I think there's a tremendous amount of challenges there.
Great, thank you. Very quickly, Vijay, and then John, and then Bénédicte.
Okay, I think changes in technology are so immense, and the people getting impacted by this most are the banks. And unless banks recognize and realize that nobody gets up in the morning to go to a bank, and if you've got to be relevant in the changing, technological future, in the manner in which money is evolving, it's better you get subsumed in experiences to make yourself relevant.
So I started off talking about the power of partnership and collaboration in this space, and that's where I want to conclude. I think the innovation that the payments industry needs, the financial industry needs in the tech space, is only going to come about through collaboration and partnership. And a lot of that innovation is sitting in this room today. And I think it's by partnering with the company sitting up here on stage today, in addition to working in the various regulatory sandboxes, is a way to de-risk what you're doing by working with companies who have a lot of experience in managing that risk in a very complex regulatory environment, but also by learning through collaboration. And I started off talking about Start Path, and that's where I'm going to end.
Thanks. Bénédicte.
Yeah, so in the prior presentation again of Ravi Menon, this topic came up of people going to supermarkets and now they want to check out de facto automatically, and they just let's say there's an automatic reading of what's in your card and then you exit, that's it, right? So I think that's what's going to happen with finance, is there is something with this evolution of the mobile phone. Just think about it. You're becoming much more mobile phone based, but let's say you like it sometimes even nameless and faceless, okay? So I think what's going to happen is further digitization for sure, more nameless, more faceless, more immediate, and for everyone, so inclusive. What shape that will take, whether it's in the form of blockchain or other technologies, I think it's multiple, as I said, and I think coins are here to stay for a while.
Coins are here to stay. Great. Thank you very much. Wonderful panel.